Okay, let's jump straight into it. So we've got gold first up that I'm just having a look at here. So gold certainly seems to have sort of slowed down a little bit. Like if you zoom it out a little bit here, you can see like obviously this strength, this is obviously not maintainable. But yeah, it was firing, firing, firing. This is all like, when Middle East situation was first kicking off, yada yada. Now we're starting to see a little bit of a sort of I don't want to say it's rolling over, like more sort of consolidating, but I guess, yeah, you could say it is a little bit kind of rolling over. If we sort of like, this kind of thing here. Basically, we're just sort of seeing it like, it's needing justification to sort of push a little bit higher. Like this isn't a perfect sort of thing. This is just sort of basically sort of emphasizing the point of this sort of rolling over sort of motion here. But certainly, look, there's trades to be made. These sort of like just buy and hold and have it go through the roof things. Obviously, not sort of happening so much. The last two Fridays are probably worth noting because obviously it's Friday morning now. What are we, 10:30? So we've got Asia session coming up soon. Also, we've noted it's a bank holiday in Japan today, so we're going to sort of watch how that sort of affects sort of flows and volumes. Obviously, mainly sort of through Asia session. But anyway, back to gold. So yeah, we're seeing a little bit of this sort of like almost sort of rolling over, but I'm going to say it's more sort of just consolidating because the dips are still being bought each time. And if we sort of clear this up a little bit, so I'll just go through a little bit of the previous price action so you can see how it is actually trading very well technically because I mean these are the obviously the sort of calls that I've had the last couple of weeks. And it's been holding these technical zones very well. You can see that this rising support had 5 touches on it, and when it gave it up, bang, it gave it up, and what's this? You know, dropped off $15 from that break there. But it came into so one second, let's get rid of these. Came into this previous support zone, which this is why we sort of keep it marked on here. Previous support zone offered a great sort of entry for people to try and get long again. Push back up. This is sort of like now sort of taking a bit more of a short-term bearish approach. You've broken this rising support, so a natural spot for it to go to is to retest, excuse me, retest the break point of that rising support, which it did perfectly just here, which also comes in line with previous highs, previous supports. So you've got a confluence. You've got the two reasons, two segments of the market that want to sell it from here, and you can see, bang, they sold it, and they sold it down hard. But as it sort of came down, now we're seeing this new support line come into effect and it's holding support on this falling support and previous lows along here. And this is what I mean with gold. It's very well structured. It's not really such a sort of flamboyant, like goes halfway up and you can't pick why did it stop here. Because, as I said, it's a 12.5, $13 trillion market. There's a lot of sort of people moving these things around. But it's obviously very well orchestrated. And this is why it's very good to chart. So now again, look, we're back into this sort of like, it's come down to the lower ends. It's come just below these wick lows here, which is this one here, snap back up. Came down here, did the same thing, snap back up. So we popped out of this little sort of falling wedge. Wasn't a great sort of wedge, but it did have a couple of confirmations on it. We've popped out, and as you'll notice, I've just popped this one on just before, this falling support here, if we drag this up to the top line from our high previously, this shores up and gives us almost an identical point. Let me get rid of that. Identical point where we've seen the sell down happen again. This again in confluence with a zone that we know has been previous supports, been resistance. So these are the kind of levels that I'm looking for to see it sort of break and go through. So in the short term, I'll clean a little bit of this up because it's a little hard to sort of follow what we're particularly looking at the time. But if we get rid of these ones. Okay, so you could say that this was a little break back test at this zone here, which is obviously in line with these sort of supports that we've seen. So these ones we can draw up because this is relevant for where we want to see it move now. So this is our bottom side. This is basically, I'm calling it this tight little range here. If you zoom out, the grey ones are the higher time frame sort of support and resistance zones, and that as obviously we saw it hit the 2006 to 2010 kind of area, and that sort of held. So this is obviously a well-respected major. This is the major breakout if you get above here. But in the short term, these are the levels that we want to break. We want to go if we're seeing a close underneath 77. This is on a 4-hour chart. Close underneath 77, which it's managed to hold and hold 2 times previously. It only just came in and just tipped this place, so the buyers have actually stepped up a little bit in this last push up here. But you know, considering both options, if it closes down underneath 77, so if we get a close of a 4-hour candle at say 75, that for me is going to be confirmation. We could see a little push up in the new 4-hour, and then once that 4-hour comes down and breaks the 4-hour candle that closed outside, excuse me, that's going to be the entries for some short positions. I'm not so much looking for short positions. Look, I do have this large wedge that I was talking about earlier. A technical level for where this would be for a measured move would be down here in 1950s. So I'm not looking to short gold necessarily. If it breaks down here, I'm going to hold off, and I'm going to look for buys on lower levels. So to sort of pick up the thing, because I do think we're going up above 2000. But you know, there's nothing to sort of say that it can't sort of continue because, as I said, this could be starting to shore up a bit of a downtrend channel at the moment here, what we sort of saw confirmed last night, because we saw it, if we can get rid of this one here now, this could be, as I said, here's a touch, and that's obviously that's the range one there, but 1, 2, 1, 2, 3. This is kind of forming a bit of a short-term range. So if it breaks under 75, I'll be looking down for sort of other confluences as it comes back into this sort of falling support down here. This is the measured move. So if it gets down to the 50s, I'll probably add on a bit more weight for a little bit of a move back up towards the 2000s. But anyway, so that's the short bias in that. If we get the close underneath 75 on the 4-hour, I'm going to be sort of holding off on buys. I'm going to wait for it to sort of come down a bit lower and then try and buy it back up. Top side, as I said, we've got this little range that it's working on here. If we see a break of these previous highs that we pushed at overnight, so we know that this area here, which is, where are we at here? 91 to 93, let's call that, because the top of the wick is 92 there. So 93, so if you get a close up above 92, 93 area, then we know that the sellers and the people that want to sort of chop and change in this little zone that we've got marked out, we know that they're depleted. So if we get a close, see I've got the alert set up there above 33, I think that's going to then come up and test that major resistance zone, which is the 2006, 2007 area. So at the moment, I'm going to hold off on doing too much for it. If we can get above the 90s, then I'll sort of start to sort of jump on a little bit. Below 70s, then I'll sort of probably hold off a little bit and sort of wait for the lower entries to sort of get long. But mainly still bias is long, but obviously we're potentially in this short-term pullback downtrend. Going up above here, as I said, it's above your little range highs. It's a breaking out of what is attempting to make a downtrend channel. And we could also drag this up here just for now, although that's a fairly steep gradient. So yeah, I think that's, I don't expect this little white one that I've just put in to hold, but look, I'll put it there for reference in case we do get a bit of a push up, and then we could be starting to look for where that new channel may be forming if it is to be sort of moving back up. But these white ones are not confirmed as of now. All right, so flip on to DXY. DXY, we saw didn't even close that gap, and this is the reason that I think that gold may have a little bit of a push down at some stage as well, is because you know most things gaps close. Like 99% of them gaps close. Gold had a runaway gap at 1810 to 1830 or whatever it was the other day. No, it was 1830 to 1850, whatever the gap was in the Middle East situation started. That was a runaway gap, and that hasn't closed yet. So who knows? In time, I'm sure gold will fly around a lot over time. But yeah, for now anyway, that's a runaway gap. DXY, on the other hand, I think could potentially see some sort of rally. We got NFP tonight, so who knows what that'll really do to the market. Maybe they want to see, like, DXY, although they had the FOMC, that's a big one that they're looking for, and that sort of gave up the goose yesterday. Well, sorry, 2 days ago. Well, actually, yesterday morning here, we saw that big, massive gap down, and it just ran. And that's why I've been saying, like, DXY will always, not always, but, a lot of the time follow the gap. And normally they're gaps of like, so, 2 or 3 points. You can see these sort of things here. Small gap, bang, run, small gap, bang. But, this was like a larger sort of gap than it normally does, or it's considerable larger, and it just melted down. Anyway, so potentially, if we see DXY ripping up to the top side here, I think this is the time that we might see a bit more of a pullback with gold. But for now, it's certainly in this little sort of short-term pullback area. It did manage to hold this support line. So this is the range that sort of we've been trading. Obviously, you've got these little areas where it's sort of gone over the top. With ranges, they tend to not always, but they'll tend to have a bit of a swing almost equal to the other side. So like a sort of pendulum going back and forth. So where's the little thing going here? So you've got this area here, came out, came back down the other side of the area, bang. Up the top over here, bang. Came back down along here, bang. So these are the sort of things. It's like, but this is still the main medium-term range that we're looking at. And then, of course, the bigger one is to come down here and take out these lows. We've got the alert set up way down here. But for now, the fact that it managed to rally up and close inside this range puts it in a caution for a potential sort of move back up, at least in the short term. As to whether it closes the gap now or not, I don't know. That is a bit of a rip if it does sort of come up this high. But yeah, look, it's just come online now, and we've got a little bit of a gap up. Let's have a look. Yeah, see, that's like, I mean, where are we at? It's not a massive gap, but yeah, 4 points. So we're back to kind of vaguely normal. But again, I'd expect this to see a little bit of a continuation upward here. So we can start to sort of think where might it sort of go to. You can see there was supports here. I'll just do this before I get out of the way. And this was what I was saying yesterday, that, if you cut through this area here, I mean, obviously it came here and did a little back test of it, but bang, came down, and that's where we were expecting it to go. And obviously it overshot a little bit, and then boom, came back up through it all. So move this out of the way now so we can see what's happening with today. But yeah, so we can see short-term wise, this is on the 1 hour now, that we've got previous supports here. So this is an area of reference, sort of, if it is going to sort of come back up. Oh, this one over here. So this is a potential area. We've seen that this area just above, which is marked out, this is also an area of reference. I would say if you can get above this 106.50, which is where the gap started, then you're going to see the gap close. I mean, again, that's a fairly, it's not a massive move. What are we at, 620 now? I mean, for DXY, it's a decentish move. So certainly a possibility of closing this sort of gap. But I wouldn't be surprised now that we've got this little gap up to see some sort of follow through. I'm still looking I'm still looking more downward bias. But of course, that doesn't mean that we can't just sort of flow up, because if we zoom back out on DXY, realistically, we're still just sideways. I mean, you've seen up, and this is just grinding sideways. They're not allowing it to close above here. You saw this big push up prior to FOMC. I can't remember what the news was. Something sort of supporting it, sort of really ripped it up here. I think it was ADP. So ADP was a weird one because obviously the figures were quite weak. Had an initial sell-off and then just rallied the hell out of it afterwards. So I don't know, maybe that was just a sort of pre-FOMC move, and that sort of like gave it a bit of a sort of stopping out of anybody that was in these technical levels above kind of thing. But certainly for now, as you can see, even on this daily here, and this is what I was saying, these are your lines here. And this is why I say it overswings, it overswings, it overswings, but it still closes inside this range. I mean, obviously we had this one here that sort of dumped down, but you know, next day, bang, back up, and this is your range. So I think realistically, when we get a daily close outside this more short-term medium range, 106.10 to 106.60, then we're going to see the test of the major ranges, which are these ones here, which actually coincide with your weekly ranges up here, which we had sort of marked previously. Obviously, these are quite wide ranges here. That you can see these previous resistance, 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 resistance again, and now this resistance, the lower side of this, is holding to see if that can hold as support. But I mean, again, every time frame you put it on just shows this back and forth, back and forth, back and forth. So, you know, you can't say that it's dead. You can't say that it's moving up. Obviously, the fundamentals at the moment are probably, it's a mix because sort of like, you know, on the home front, i.e. their rates and that, they're pointing at a cooling off because the Fed sort of held and wasn't overly hawkish in that, and so hence the sell-off. But you still have, for what it's worth, this Middle East situation going on. And as that's going on, people are still looking for safe havens. Gold is cooling off. I haven't had a look at yen so much in that, or the franc and that, but these sort of things, they're other safe havens. So, you know, but point being is that US dollar is also a safe haven. So this is what's keeping it buoyant. So particularly while gold was running, we didn't see a massive sell-off on US dollar. So people are still happy to park their money there, at least for the time being. Short term though, as I said, we've got this little bit of a push up here. I wouldn't be surprised if we see a little bit of a push up early and then a re-attack at this 106 zone down under here. If we come back down to this 106 zone and hold it again, then I would say the gap is going to close. I would say that's a fairly strong signal that the buyers are happy to get it there. So either here to here, or here to here, but this will be the test. If we can't close under here, then I imagine it'll come back up to here. All of a sudden, we'll be down here like this. And as I said, as it comes down, then you're looking at your major ranges. So the top side targets, also higher time frame targets, I guess you'd say, are this previous sort of resistance of this little range that we're in, or downside will be your major sort of supports there for that major range. But NFP tonight, so we'll have to sort of see how the market generally goes a little bit quiet prior to these larger news events. Okay, moving on. So just wrap it up quickly. Copper grinding back up into this top zone here. So we, like, as you can see, I was looking for this pullback, you know, a couple of cents short of it all, but we are seeing this break, pullback, and now push through. Again, still where the alert is, take out those highs. Well, for me, is going to sort of confirm that this will be our new sort of range up around this zone over here. So it's slowly grinding up at the moment, and this is again sort of, even if we get a bit of a push up on on DXY, if copper can stay buoyant, then that's going to help Aussie stay buoyant. Well, sorry, if copper pushes up, it's going to help Aussie stay buoyant. So still not a great deal to remark on copper. It really has been a bit of a grind. It's starting to hold up a little bit of a sort of rising support here. So this will be interesting as well if we do get a break. So I'll put that down just a little bit and put an alert on it. So it's it's all over the place. Okay, support, boom. So for now, that seems to be holding fairly well. Have we got any channel? Yeah, I mean, you could say that that's for shoring up a little bit of a channel here. So again, a break of this wick. Now we know sort of kind of where might we be looking up over here. We've got the bottom side of this previous major triangle, which will be offering some sort of resistance. We've got these previous highs that'll be offering some sort of resistance. Top of this channel offering some sort of resistance. So around this zone over here is where I sort of think we could sort of potentially be moving in the short term. And then once we do this, I imagine, whoop, that one, that we might sort of be doing this. And we've obviously got our pullback down here, bang, to push up here, and then, you know, however this sort of runs like this, dun, 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 dun. That could be, again, a pullback to the top of this point, which is obviously a resistance. But I think short term, we've got a little bit more upside around that 370, 378 kind of zone. I think, you know, there's a couple of reasons to sort of say we've got the previous highs over here, underside of that triangle. We've got a little bit of this channel going here. So I think that could be a reasonable area for us to move towards in the short term. And finally, just tap onto China. China still the great grind. Geez, it's yeah, it's just moving sideways. But look, realistically, we have the short-term trend here. This is everything. So it is like it's a structured grind. So breakdown's not breaking down really, but you know, you can see here, perfect sort of thing. Broke this rising support, came down to the horizontal supports, bounce back up, test the underside of this thing, which is the break point. So you've got the confluence there, underside of the short-term trend. You've got the break point of that trend, and then bang, sold down again. Unable to sort of get down and sort of continue down. So, you know, unable to close under, bang, pushes back up. And this is what I mean, sort of like, this is what I'm saying, this little example here of what we're looking at with DXY. So if you think if that's the bottom of that range that we were looking at on DXY, which is this bit, where is it? Yeah, just here on the daily. If this comes back down to this point here and can't close underneath here, that means we're not continuing down lower, which will spark this kind of reaction here. Support one, support two, couldn't close under, bang, push back up. Now, that doesn't mean that you can't sort of come down and attack it again, but it just sort of means that you're going to take a little while longer to do so. So it's a little bit of a sort of, we're still getting lower highs as of right now with the one. So yeah, but I mean, this is super short term for the one for China. So we're not really looking at on these kind of things. Mainly this daily is what we're looking for. We've tried to be sort of calling this sort of head and shoulders, but I think you're just going to have to say it's obsolete now, and it's really just the range. So as you got it marked out here, consolidation box. We're at the top end of it here. We're seeing a little bit of a sort of negative divergence, obviously, with this second push up here. So I still think we're going to have a little bit more downside to come down here. But the major ones for these are really to get outside or get below that 726 or get above 736 and then sort of move to the top side and top side down there. But for the moment, it's a super, super tight grind. So there's no reason I can see at the moment for it to necessarily break one way or the other. And if there's no reason for it to break one way or the other, well, then you'd basically just assume the range is going to continue. So if the range is going to continue, we're going to see more downside push. But again, sort of like, you know, you got to see the flows sort of support it and not just these sort of little back and forths. All right, cool. That's about it from me. Went through all those charts and just forgot to do the little look at our little favorite one at the moment, the Aussie. Aussie's beautiful break. This is just what we've been sort of trying to plan for, what we've been trading for. This little wedge pattern, you got the break, got the back test, and you know, subsequent blowout the top side here. So things are sort of slowing a little bit. I mean, it's only early days. We've got, you know, Tokyo online in 3 minutes and that. You're seeing these nice big candles moving to the top side. It's good. It's come into this resistance zone that obviously we marked out. This is on a daily time frame here. So again, sort of you want to see continuation. So if we can sort of take out yesterday's wick, which is 64.56, which is this top end up here, which we had marked out, and this is a perfect example. You know where the buyers have been, sorry, the sellers have been previously, so you can plan for it and you can sort of get off some of your positions. Some of mine, well, you know, quite a few of mine, I sort of scaled from 30s, 40s, and 50s. 30s being the sort of round area down here. I think the last one I got off was at 54. So, you know, went 56 high. So pretty much smack bang on the top there. Because again, like I'm trading, I'm not investing. I'll hold some runners, of course, But you know, I'm not here to sort of, you know, buy the bottom and hold for, you know, 400 points on an Aussie, which is a big move. 400 points on GJ is different. But, you know, I'll say this is my price target and I'll attack the whole way up to the price target. And obviously, you know, out in, out in, out in trading like a bandit, mate, in and out. But that's the whole point of it. That sort of like, you know, if you can sort of take profits along the way, then at least you're getting paid for your work. You're not sort of doing it and then sort of going, oh, wow, I had all this stuff and then boom, it fell over. Because you got to think again, we're fighting against a very strong technical down and also a fundamental sort of downward position for the Aussie. So, you know, certainly you don't want to sort of be too brass with this stuff and go, oh, you know, I'm going to hold everything for the top. No, I'll go in with segments, I'll go out with segments. You know, and I mean, I won't drop a change, but I'm still looking long. I'm not going to short this at the moment, but certainly, yeah, you got to take those little wins where you get them. But if we sort of jump down onto lower time frames, we can sort of see how yesterday's price action, and this is what I was saying, it took a couple off in the 30s, bang, pushed up, it took a couple off 40s and 50s as we moved up into this zone over the top here. So it's moving up a little bit at the moment. Nothing to note, nothing super of note. Obviously, we've got the new daily candle sort of coming online, and it's just putting in a bit of a bottom wick currently. I did notice this down on a lower time frame. If you were to call it this, you could say that this is looking a little head and shouldery. This is obviously just short term, so I'm not expecting so much. Like, this is what I was looking for, a pull back to this line that we popped in there yesterday. And, you know, obviously it's a couple of pips. What are we? 12, yeah, 1 pip. We're close to sort of where we were saying we were looking for that sort of pullback into that position. So, you know, at the moment, we've got a little short-term little range that it's working on here. If you really want to knuckle down onto this one and sort of add or sort of, yeah, basically add to positions, want to hold above 26 in the short term. If not, then be looking to sort of add a bit more, probably down at 15. If we break 15, then, you know, I think realistically what we could be looking to do is a retest of this major resistance area here, because we haven't had a touch up here. And from a technical standpoint, you always want to see when you break a zone, you get a retest. That always shores it up. I mean, if you just explode and keep on moving up, well, all the best to it, and keep on going. But generally, on a way that things are trading, non-news related, if it's just general price structure, you're going to see you break and you retest, and then it's going to go. So if we close down underneath 16, I would say probably a little dip underneath 64. 64 is obviously the round number, so it may hold it a little bit. But this goes in line with DXY. If DXY goes to close that gap, then, you know, Aussie's not part of DXY, but as a broad US dollar buying sort of position, we're going to see a sell-off in the short term with Aussie. But as I mentioned, with copper sort of holding up a little bit, that's obviously helping, sort of going to help keep Aussie a little bit more buoyant. So if we take these highs and those ones, we'd like to see a little bit of a pop through here. But in the short term, I think sort of, look, it's just making this tight little range. So above 35 could be, I mean, you could also say that we got these highs over here, 39, so 40, maybe above 40 should be a good sort of 15-point move up to at least test these highs, and then sort of see what happens at that zone. If we break 55 or 56, whatever it is, the yesterday's highs, if we can sort of go past this, then we're sort of opening up to, you know, the 64, 64.80, 64.90 zones. And as I've sort of pointed out a couple of times with the Aussie, the 90s is a very strong point support and resistance. So, you know, if we can sort of get above these sort of 50s, 55, I'll be looking up around this sort of 80 to 90 zone. And then I think we'll probably be seeing a little bit of a cooling off from that point there. As I said, we've got NFP tonight, so anything can happen with that. So it's one of those things. I don't like to be too heavy in positions going into these larger news events, but certainly I think from a technical standpoint, Aussie's got a lot more. It's got a bit more sort of upside, at least in the medium term. So yes, that's just what we're looking at with that one. All right, and that's it for me.